something just changed in XRP that matters more than it looks. Ripple says its businesses touched roughly $16 trillion in transaction activity last year, yet only about 0.1% was on-chain, and that gap may be the most important part of the entire story. In the next 60 seconds, we'll break down what Ripple's new international strategy, Ripple Prime, Ripple Treasury, Hidden Road, stablecoins, and that massive transaction base could mean for XRP's role in the financial system. The headline isn't simply that Ripple is having a record year. The biggest story is what Ripple is becoming. For years, XRP was at the center of Ripple's conversation. But Brad Garlinghouse is now describing a company built around something much broader: institutional financial infrastructure. Ripple Prime, Ripple Treasury, Hidden Road, stablecoins, global liquidity, treasury management. And then there's that $16 trillion figure. Ripple says its business touched approximately $16 trillion of transactions last year, while only around 0.1% involved on-chain settlement. That means the overwhelming majority of this financial activity is still happening through traditional infrastructure. And that is precisely why the number matters. Because the question isn't whether the entire financial system suddenly moves on-chain. No. The question is what happens if even a small percentage of an enormous existing financial system begins moving on to digital rails. That is where this Ripple story gets much more interesting. Ladies and gentlemen, if you want the satellite perspective on XRP and crypto and want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can actually see what actually matters in the markets. Thank you always to everyone who likes and shares each of our videos. These two things really do help out the channel. One of the clearest historical examples is the development of modern banking during the Renaissance. The Medici banking system didn't suddenly eliminate every existing form of commerce. Instead, the financial institutions created better mechanisms for moving capital, managing credit, and facilitating transactions across geographic boundaries. The important innovation wasn't simply money. It was infrastructure around money. That distinction matters today. Blockchain doesn't necessarily need to replace every bank account or every currency or every financial institution to become transformative. It could potentially improve the infrastructure connecting them. And that is essentially the opportunity Ripple is pursuing. The interesting part is that Ripple now has multi-pieces of that infrastructure. There's the payment technology. There are stable coins. There are XRP. There's Ripple Treasury. There's Ripple Prime. And there's Hidden Road. These aren't isolated products. They're becoming pieces of a broader financial stack. Short-term noise, long-term structure. And I think that's one of the most important ways to understand what we're watching. Regulation is part of the story. But none of this happens at institutional scale without regulation. And that brings us to the Clarity Act. Garlinghouse was asked directly about regulatory clarity and the industry's political efforts. His response was fascinating because Ripple has already lived through one of the most important regulatory battles in crypto. The SEC's lawsuit against Ripple lasted years. And Garlinghouse pointed out that a federal judge determined that XRP itself is not a security. But Ripple's argument is that XRP having legal clarity doesn't automatically mean the entire industry has clarity. And institutions care about the entire framework. Imagine you're the chief financial officer of a multinational corporation. You're not simply asking, can I buy XRP? You're asking, can I legally use this infrastructure? Can I move liquidity through it? How does accounting work? How does custody work? What happens from a compliance perspective? What are the rules across jurisdictions? What happens when billions of dollars are involved? That's the institutional question. And that's why regulatory clarity matters. Ripple says it has obtained approximately 75 licenses around the world. Whether you agree with Ripple's political strategy or not, the underlying business logic is straightforward. Institutions do not want ambiguity. They want rules, write that down. They want compliance frameworks, write that down. They want predictable infrastructure. They need it. And they want someone accountable when something goes wrong. That's why the argument that crypto is inherently anti-regulation misses the institutional evolution happening inside the industry. Here's the political battle. Garlinghouse made a pointed comment about Elizabeth Warren and what he characterized as inaccurate claims about crypto. I'm not going to turn this into a partisan political discussion. The bigger point is what this tells us about the industry. Crypto companies increasingly understand that regulation isn't something happening to them. Regulation is becoming part of the competitive landscape. That is why companies spent enormous amounts of money trying to influence policy. That is why Fair Shake became such an important political vehicle for the industry. And that is why the Clarity Act matters. Garlinghouse acknowledged that there are debates around ethics and congressional stock trading, but his argument was essentially that those questions shouldn't become a reason to prevent broader financial market legislation from advancing. Whether lawmakers ultimately agree is another question, but the structural point is important. The crypto industry is trying to move from regulatory uncertainty towards institutional legitimacy. And if that happens, the next phase of adoption could look very different from the last one. Because the first phase was largely, can crypto survive? The next phase is, how much financial infrastructure can be rebuilt around it? So the shift from asset to infrastructure. Now, this is what most people miss. Garlinghouse was asked about the transformation happening across crypto. And I think his answer captured the entire evolution. The industry started with crypto as an asset class. Now it is increasingly becoming crypto as infrastructure. Let that sink in, marinate on that, write that down. That's enormous because an asset can be traded, infrastructure can be used, and usage creates a completely different economic dynamic. Think about the internet. The internet didn't become important because everyone bought internet tokens. It became important because businesses built their operations on top of it. That's our first historical analogy. Blockchain infrastructure may eventually be judged less by how many people speculate on tokens and more by how much economic activity actually depends on the networks. That doesn't mean every blockchain wins. It doesn't mean every token succeeds. It certainly doesn't mean prices automatically rise, but it changes the question. Instead of asking how much is this worth or how much is this token worth, institutional investors may increasingly ask, what financial activity is this infrastructure actually processing? That is a much more sophisticated question, and Ripple appears to be positioning itself directly in that transition. Why Ripple is diversifying? Garlinghouse made another extremely important point. Companies whose revenue depends heavily on retail trading can become highly vulnerable when crypto markets fall. If asset prices collapse, trading activity can decline. Exchanges can struggle. Companies can lay off employees. Some businesses can disappear. But infrastructure, businesses can have a different revenue profile. Let that sink in, so important. Ripple says it's on a track for a record year and expects revenue to more than double year over year. Again, that is Ripple's own characterization, not something I'm presenting as independently verifiable financial guidance. But the strategic point is important. Ripple doesn't want its business model to depend exclusively on whether retail investors are buying XRP today. It wants to make money from the financial system around digital assets. That's a completely different strategy. And that is why acquisitions become so important. Hidden Road changes the equation, ladies and gentlemen. Let's talk about Hidden Road. Hidden Road, acquired by Ripple, is a non-bank prime broker. According to Garlinghouse, Hidden Road cleared approximately 3 trillion of transactions last year. Write that down. That's massive. That's not a small crypto startup operating at the edge of the financial system. That's financial market infrastructure. And Ripple's other major acquisition, G Treasury, is focused on treasury management. That's so massive. Garlinghouse said G Treasury touched approximately 13 trillion of transactions last year. That's massive. Put those together. 3 trillion plus 13 trillion. And Ripple says its broader business touched roughly 16 trillion of transactions. That's the number I think deserves to stay in your head, because then Garlinghouse makes an even more interesting calculation. Only around 0.1% of those transactions were on chain. That means approximately 99.9% wasn't. At first glance, you might think that's actually a weakness. I think it can be interpreted another way. It may represent the size of the opportunity, because if Ripple is already connected to enormous volumes of traditional financial activity, the question becomes, how much of that activity can eventually migrate to blockchain-based settlement? The 160 billion calculation. Let's do the math. If Ripple touches 16 trillion of transaction activity, then every 1% represents approximately $160 billion. Write that down. That's the significance of the number. If 0.1% is currently on chain, that's roughly 16 billion of activity. That eventually became 1%, you're talking about 160 billion. At 5%, you're talking about 800 billion. At 10%, you're talking about 1.6 trillion. Write that down. It's massive. I'm not saying those percentages will happen. They are illustrative calculations. And this is not a prediction, but it demonstrates why infrastructure adoption can become much more important than headline crypto trading volumes. Because the underlying financial system is enormous. Every tiny percentages of enormous systems are enormous. And here's where the XRP enters discussion. Ripple can potentially use different settlement mechanisms, including XRP, the anointed one, and RLUSD, depending on the use case. The strategic objective isn't necessarily put everything on XRP, baby. The broader objective is move more financial activity onto efficient digital infrastructure. And XRP could become one of the assets used to facilitate that transition. That distinction is critical. See, the CFO revolution. But the most important part of the interview for me wasn't actually the $16 trillion. It was the conversation about CFOs and treasurers. Garlinghouse said that over roughly the last 6 months, he has increasingly encountered CFOs and treasurers approaching Ripple. And they're asking questions about stablecoins, not because they're trying to become crypto traders, because they're trying to solve corporate treasury problems. That is a major distinction. Imagine a multinational company operating in 30 or 50 countries. It might maintain liquidity in dozens of jurisdictions. Some of that capital is sitting idle. Some of it's required for local obligations. Some is trapped inside slow-moving financial systems. And some of it isn't earning an attractive return while waiting to be deployed. See, the CFO doesn't care about crypto ideology. The CFO cares about liquidity, yield, speed, risk, compliance, visibility, settlement, and capital efficiency. That's why Ripple Treasury could become strategically important. See, if a corporate treasurer platform can provide a better global view of liquidity while connecting liquidity to modern settlement rails, then blockchain suddenly becomes a business tool rather than an investment narrative. This is so important, ladies and gentlemen. See, prices reacting, systems evolving. There is a useful historical example here. During the Industrial Revolution, the most transformative developments weren't simply individual machines. The transformation came from interconnected systems, factories, railroads, ports, banks, telegraph networks, supply chains. Each technology reinforced the others. A faster railway was more valuable when connected to a larger commercial network. A telegraph became more powerful when businesses could use it across an expanding economy. The infrastructure became the multiplier. And that gives us our second historical analogy. The blockchain economy could potentially work the same way. A blockchain by itself is infrastructure. A stablecoin adds a payment layer. A treasury platform adds corporate liquidity management. A prime broker adds institutional market access. Tokenized assets add financial instruments. And settlement assets can connect the pieces. The value isn't necessarily in one product. It is in the network effect created when the products work together. That is why and what makes Ripple's acquisition strategy so interesting. Ripple Prime plus Ripple Treasury. See, Ripple is essentially assembling a financial stack. Hidden Road gives it prime brokerage infrastructure. G Treasury gives it treasury management infrastructure. Ripple Prime gives it institutional trading and liquidity capabilities. RLUSD provides stablecoin component. XRP provides a native digital settlement asset. And Ripple's existing payment technology connects the system to financial institutions. That's a very different company from Ripple many people remember from years ago. And it explains why Garlinghouse said Ripple has been willing to spend aggressively on acquisitions. He noted that Ripple completed roughly $2.5 billion in acquisitions last year. He also said the company has conducted approximately $3 billion in tender offers over 2 years, providing liquidity to shareholders while remaining private. That brings up another question. Does Ripple eventually go public? Garlinghouse's answer was basically, they're comfortable being private. But he acknowledged that the company is more neutral on the question than it once was. Why? Because he expects consolidation. Crypto's gone through multiple cycles, and every major crypto winter has historically produced consolidation. Companies disappear. Others acquire them. The strongest infrastructure providers become larger. That could happen again. Here's the AI question. Then the interview moved into artificial intelligence, And Garlinghouse had a contrarian argument. He essentially said AI isn't necessarily the reason companies are laying off employees. Sometimes, according to his argument, AI is simply being used as an exploitation for organizations that were already being bloated. His example was Twitter and other companies that dramatically reduced headcount. His broader point was that growing businesses can use AI as an accelerator. Ripple currently has approximately 1,500 employees, and Garlinghouse said the company had around 150 open positions. That's an interesting signal. If AI automatically meant fewer workers everywhere, a rapidly expanding financial infrastructure company wouldn't necessarily be adding staff. Instead, the model can be AI makes each employee more productive. That allows the company to grow faster. And this connects directly to finance, because AI may eventually create a huge increase in the number of autonomous transactions occurring across the economy. But there is a major problem. Who controls the money? The agentic payments problem. This was one of the most important warnings in the interview. Garlinghouse pushed back on the idea that agentic payments are ready for unlimited institutional deployment. Imagine AI agent managing purchases, right? It needs access to money. But now imagine giving that agent access to a corporate checking account containing hundreds of millions or billions of dollars. Suddenly the problem isn't, can AI make a payment? The technology can probably do that. The problem is, who is accountable when the AI makes the wrong payment? That's a completely different story. See, corporate finance requires controls, authorization, limits, auditability, identity, compliance, human accountability. Say agentic finance may be coming, but the excitement could be ahead of the institutional reality. And that matters for Ripple because the company sits at the intersection of payments, liquidity, and financial infrastructure. If AI agents eventually transact economically at scale, they will need payment rails. But those rails will require enormous amounts of governance. So what this means for XRP, the anointed one. So where does XRP fit into all this? This is where I think investors need to separate three things. Number one, XRP as an asset. Number two, Ripple as a company. Number three, blockchain-based financial infrastructure. They are related, but they are not identical. Ripple can grow its business even when XRP isn't moving dramatically. Ripple can use stablecoins. Ripple can provide treasury software. Ripple can operate prime brokerage infrastructure. Ripple can acquire financial companies. And XRP can still have a role within the broader ecosystem. The important question is whether institutional adoption eventually creates meaningful demand for XRP-based liquidity and settlement. That's an open question. Nobody can guarantee the outcome, but the infrastructure being built creates a pathway for that possibility. And that's why I don't think the XRP thesis should simply be XRP will go up. That's too simplistic. The more interesting thesis is, could XRP become part of a financial system that increasingly settles value on digital networks? That is the question worth watching. Short-term noise versus long-term structure. And this brings us back to something I say repeatedly. We can spend every day looking at candles. We can debate resistance levels. We can argue about whether XRP is overbought or oversold. But those are market questions. The structural question is different. Are banks experimenting with digital assets? Are corporations exploring stablecoins? Are treasury departments examining trapped liquidity? Are financial institutions building tokenization? I want to hear in the comments, what do you think? Are regulators creating clearer rules? Again, in the comments, what do you think? Are financial companies acquiring the infrastructure necessary to operate in a digital financial system? Those are the questions I would be watching, and I want to hear your answers. Because price can move in either direction while the underlying infrastructure continues developing. Price is reacting, the system's evolving. Pay attention to what's quiet, I always say. And sometimes the market doesn't immediately recognize structural change. So here's the big picture. Look at everything Ripple is assembling. Payments, stable coins, treasury management, prime brokerage, institutional liquidity, custody and financial infrastructure, regulatory licenses, and potentially blockchain settlement. That's not a meme coin strategy. That's not a retail trading strategy. That's an attempt to participate in the modernization of financial markets. If that modernization succeeds, it can involve many blockchains, many stablecoins, many tokenized assets, and many settlement mechanisms. This isn't necessarily an XRP-only future, but XRP is positioned inside a company that is deliberately building infrastructure around institutional finance. That's what makes this story worth following. Here is what most people are missing, ladies and gentlemen. The biggest institutional opportunity may not be replacing the existing financial system. It may be making the existing system dramatically more efficient. Banks don't necessarily need to disappear. They may simply operate differently. Treasuries don't necessarily need to abandon fiat currencies. They may use digital infrastructure to manage them more efficiently. Stablecoins don't necessarily need to replace every bank deposit. They may become another layer for moving dollars around the global economy. And XRP doesn't need to replace every settlement mechanism to become economically relevant. It would only need to capture a meaningful role in the very large financial system. That's a much more realistic way to think about adoption. I want to hear your thoughts, ladies and gentlemen. So when I look at this Brad Garlinghouse interview, I don't walk away thinking the most important story is whether XRP goes up tomorrow. I walk away thinking Ripple's attempting something much bigger. The company's building around institutional finance. It's acquiring infrastructure. It's expanding into treasury management. It's expanding into prime brokerage. It's working with stablecoins. It's pursuing regulatory clarity. And it says its businesses already touch approximately 16 trillion of transaction activity. The fast-saying number isn't necessarily the 16 trillion. It's the 0.1% that Garlinghouse says is currently on chain. Because if digital settlement eventually takes a larger share of institutional financial activity, even tiny percentages of enormous markets can become very meaningful. But we have to remain disciplined, that Gucci conviction, that Gucci clarity on our frosty march up this frosty mountain with our frosty beverage. None of this guarantees XRP adoption. None of it guarantees price appreciation. And none of it means every blockchain project will succeed. What it does show is that conversation on crypto is changing from speculation to infrastructure, from retail to institutions, from tokens to financial systems, from trading to settlement. And perhaps most importantly, from asking, what is crypto worth, to asking, what financial activity can crypto infrastructure actually support? That is a transformation I am watching. And if Ripple succeeds in becoming one of the companies sitting at the intersection of traditional finance, stablecoin, tokenization, treasury management, and blockchain settlement, then XRP's relevance may ultimately depend less on hype and much more on utility. That's the thesis, not certainty, not a prediction, a structural possibility. And that distinction matters. So now I want to hear from you. Do you think Ripple is becoming something much larger than an XRP-focused company? Do you think Ripple Prime, Ripple Treasury, and Hidden Road could eventually become more important to the company than more people realize? And here's the question I really want you to answer. If Ripple is already touching roughly 16 trillion transaction activity, what happens if a meaningful fraction of the activity eventually moves on-chain? Let me know what you think in the comments. Ladies and gentlemen, if you enjoyed this analysis, hit the like button, subscribe to the channel, and turn on notifications. Because the next phase of crypto may not be about speculation. It may be about infrastructure. And XRP could be sitting right in the middle of that transaction. Hope everyone's having a blessed day. I want to welcome all the new members of the Crypto Republic Desk Monthly in our Patreon, all the new members of the membership channel. I want to give a big shout out to Keelan and his team, the Oklahoma Energy FC, for winning their tournament last weekend. And Keelan was awarded player of the tournament. Congratulations, buddy, to you and your entire team. That Gucci conviction, that Gucci clarity. Way to go. Big shout out from the entire Crypto Republic. Ladies and gentlemen, there's something I am watching, and this is worth packing into your bag and your head. Okay, this is important. Indonesia and China to explore greater commodity market access. They will cooperate on advanced technologies and artificial intelligence, including the joint development of communications, satellites. Call me what you will, but I suggest the copper market has mispriced a bunch of deals. And if you want to hear what deals I'm talking about and the stocks I'm talking about, do join the Crypto Public Desk Monthly. Join over almost 700 active traders, investors who are taking their own destiny in hand, looking at the deep and radical research. One solid tip from the pits will pay for your entire year subscription, ladies and gentlemen. Because what we believe is going to happen is going to be a move on the U.S. copper stockpiles and a counterweight to the U.S.-China rare earth friction and the tariff on China and Canada. And it's going to be unbelievable. See, the LME, copper, will be a scarcity price. And if you're not there, as we always like to say, you shut the gate and the horse is out and bolt it. There's a lot happening. And I like to find these things that most people aren't paying attention to. So that's how you don't get cut up like sushi, ladies and gentlemen. Again, every metal now in this situation, as far as we're concerned, is a critical material will be put on a list. So there's a lot happening right here, and all these plays are going to have explosive moves. Goldman Sachs has dropped a really interesting piece. And they're talking about gold, copper in the mining sector. And there are two things that really caught my attention. Gold's path higher. I like what Goldman has to say about gold because they've been right. And they think copper's been mispriced. We do, and some other banks on the street as well. So I'm going to keep this straight. Goldman says their key level was around 200-day moving average at 4,500. It took that out. Look where it is right now. Now everyone is basically playing catch up. China was particularly important buying on last Wednesday overnight. So if you look at where this is, Goldman looked at that move as one of the top 5 position moves of the last 3 years, how much China consumed. None of this is financial advice, in my own opinion. I don't intend to pass it. So their convictions moving higher as people feel like they're left out. They're targeting a much higher. But now that Goldman's taken out the 200-day moving average at 4,500, look where it is right now, 46, almost 47. Their conviction is an 8 out of 10, which is massive, and for them. And that's very, very big. So if we get an actual regime change, what I was talking about, if you look at the Iranian currencies being crushed, we were talking about that. We were talking about economic warfare on the Iranian economy. Look at that's happening right now. The UAE may cut them off. You got people and consumers inside. The Iranian consumers can't deal with what's happening with this economic attack on them. It doesn't matter how strong your economy or military is. When this happens, it's pretty rough. So if there's a currency debasement, renewed speculation of investors coming back into that trade, then the move from 4,500 to 5,000 represents roughly another 11% upside. And you got to understand something, ladies and gentlemen. Goldman Sachs has been targeting approximately 4,900 by the end of 2026, with institutional flows having been targeted 4,800, 5,500. So the message is becoming pretty clear. Gold doesn't have to go straight up. It can consolidate. It can chop around. It can check people out. But if the monetary investment regime has generally changed, Goldman believes the upside remains attractive. And we already see evidence of the demand returning. You got gold ETFs. So look at the moves they're making. They're massive, largest weekly inflow since April. 3 consecutive weeks of inflow. It's massive. Ladies and gentlemen, you got futures traders chasing this. And I'm going to tie this into XRP because, look, everyone's basically throwing shade on XRP. And I want to know in the comments, do you think that XRP's exit liquidity? I know we may get a lot of negative comments, but I'd like to read them. I'd like to have an open forum discussion. But investment's coming back, ladies and gentlemen, to everything. There's a psychological component here that Goldman looks at, we look at. There's plenty of opportunity. There was so many opportunities to buy gold around 4,000, 3,900. It's scary. Same way there were a lot of opportunities to get XRP around $1. Think about this. Now that it's moved substantially higher, you got investors stayed on the sideline. They're starting to experience something very familiar. FOMO, baby. FOMO can create another wave of buying. But if you look at Goldman, what they're saying, they're not simply talking about owning gold itself the same way that, as well, FOMO and XRP. It pushes up another leg. Look out. They're also looking at equity opportunities underneath the gold move. And this is where it gets really interesting. Goldman highlights gold equity that has been lagging underneath the metal, while peer recently receiving a buy rating with roughly 25% upside. And that's the type of setup that I want to pay attention to. Because when gold moves higher, you don't necessarily want to chase the miners that have already exploded. You want to identify the companies where the market may not have already priced the full catalyst in. And Goldman, like ourselves, sees multiple major catalysts heading into year end, including power, infrastructure, coming online, first concentrate production, commercial production, resource upgrades and expansions. There's a lot of potential catalysts packed into a very short period of time. I'm not going to give you specific names here. If you want to see the equities that Goldman's highlighting, and the names we're watching, that's exactly the type of research that we dig inside the Crypto Public Desk Monthly, ladies and gentlemen. Come and join almost 700 active traders who are taking their own destiny in their own hand. One tip from the pits can pay for your entire year subscription. See and position before. Let's talk about copper, because this is where I think that Goldman may have identified something the broader market's missing, and we've been following this. They believe the copper market's mispriced a major strategic deal involving a major global miner and Korea's export credit institution. And this isn't simply about financing. It's more about institutional lending. And they're describing it as a preventive move from an economic security perspective. Think about those words, economic security, because copper isn't just another industrial metal anymore. It's critical infrastructure, electrification, AI data centers, power grids, defense. Increasingly, it's becoming a strategic resource. We believe XRP is a strategic resource, ladies and gentlemen, very important. Goldman believes in other banks that the market may be estimating that shift. And there's another part of the thesis I find fascinating. They see the U.S. onshore copper inventories as a potential counterweight to the U.S.-China rare earth confrontation. And the scenario is straightforward. Tariffs come on, U.S. inventories start drawing down, LME inventories tighten, copper begins to scarcity price. And if you look at this, if you're waiting till everyone sees a shortage, you may already be too late. And that's why we like copper and they like copper. Ladies and gentlemen, I talk about some of these things, and I happen to really like Goldman's moves on metals because they're right very much. You're going to have a lot of banks talking about XRP saying, look, we're going to build our own blockchain. We're going to build stablecoin. Blah, 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 blah. We can do it. We can do it better. When you build a refinery network in far-off regions and you start building something way before anyone else can see that, right? You have a different take on what's going to move the markets, right? You build an ecosystem around your main valuated proposition and you push out from there. And the center gets more valuable as you're pushing out ecosystem. XRP is the anointed one. XRP continues to make inroads everywhere. We just got to be a little bit more patient, ladies and gentlemen. We will stay here and potentially push higher until September 15th when they vote or don't vote on this. But again, if they don't pass it, they allow this administration and POTUS to write the rules of the road. And in 2 years from now, when companies are already doing everything right now and they are making money off this, the whole discussion about what will happen, blah, 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 will be very different. Ladies and gentlemen, this video is for entertainment, educational purposes only. It's not financial advice. Always consult a licensed financial advisor. Never invest a single dollar based on watching a YouTube video. I love you all, ladies and gentlemen. I'm going to see you on the front lines. If you want to see the plays that we're going to move and the whole world is looking that I just went over, come and join the Crypto Public Desk Monthly, ladies and gentlemen. Join over 700 active traders and investors taking their destiny to their own hand, getting the deeper macro research. Join our 4 weekly Zoom calls on Sunday. I love you all, ladies and gentlemen. I'm going to see you on the front lines.